On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's run through another week across financial markets, then let's talk about the coming week, which will be another busy one. So, starting with share markets around the world, the US market, the S&P 500 suffered its biggest weekly decline last week since November. The index was down 1.4%, and that was its fifth down week out of the last 7. So it has had a pretty volatile period. Higher growth stocks and some of the more cyclical parts of the market were the ones that fared worse. So it was the tech sector, it was financials, it was communication services. Those sorts of sectors were the ones that did it the toughest last week. Other markets performed much better. The UK was up 0.7%, Europe was steady, up marginally. The Aussie market rose 2.4%, Japan and emerging market equities even stronger again. Both of those regions were up 3.2%. So it's been really interesting lately. If you look at US stocks, and I'm talking about the S&P 500 there versus non-US international stocks, the performance gap is pretty wide and getting wider. Non-US stocks are up 8.3% this year, and the S&P 500 is down slightly. So quite a big gap. We're not even 2 months in. And if you go back 12 months, it looks pretty wide as well. Non-US stocks are up about 30%, and the US market is up about 10 or 11%. So big outperformance from the likes of Japan, Europe, emerging markets, and so forth. And I think that could continue. US stocks have been the place to be for many, many, many years. Regions like emerging markets have been perennial underperformers, but the tables have turned a little bit. And even though the US is the world's biggest market, and I see a lot of good things in the US, and there's a lot of great companies there, I just feel like some of those other markets around the world might continue to play catch up. So really interesting what you're seeing out there across global share markets. The local market had a tough week. The NZX 50 was down 1.8%. Pretty hard for our market to do well when Fisher and Paykel HealthCare has a tough week, and that stock was down about 8%. Now, it's the biggest stock in our index, and we talk about the concentration in the United States and elsewhere with some of those big heavyweights, but FPH is more than 15%, 15% of the NZX 50. So when it goes down, the index is almost guaranteed to go down. And it had a tough week last week, I think on the back of some not so great results out of healthcare stocks across the Tasman. CSL, Cochlear, a couple of others all had a pretty difficult period after reporting results that weren't quite up to expectations. Interest rate markets, a bit of movement there. Local interest rates were down slightly. The 5-year swap rate here in New Zealand finished the week just below 3.7%, and the US 10-year Treasury yield fell further. It finished the week at 4.06%. That's actually the lowest we've seen since back in November. So what were the key releases that we were watching? It was quite a big week in terms of economic indicators in the United States. We got the non-farm payrolls report. That's the jobs report. This was for January. It was quite a bit better than expected across the board. 130,000 new jobs created for the month. That was ahead of forecasts for about 70,000, and it was the highest of the past 12 months. Unemployment slipped back a little bit. Instead of going sideways and staying at 4.4%, it came down to 4.3%. So the market took that report well. Then we also got the inflation report for January, and this was more good news. Inflation a little softer than expected, so that's positive. The headline CPI up 0.2% for the month, and the core CPI up 0.3%. So in annual terms, that's a rise of 2.4%. at the headline level. Now, that's the lowest in 8 months, and it was slightly below forecast for 2.5. So headline inflation running at 2.4% in the US. The core CPI a little higher. It was at 2.5%. Now, that was in line with estimates, but it was still the lowest in almost 5 years. So good news out of the US. You've got a solid labour market and you've got slowing inflation. Now, in terms of the Federal Reserve, expectations there are still for further easing over the balance of this year. And I think that inflation report that was a little weaker did firm up hopes that we will see some cuts in the months ahead. So the next 2 meetings in March and then in April, the Fed's expected to be on hold, but you look out to the June meeting and markets see an 80% chance of a cut in June, and you might see another one, maybe another 2 after that, but I think we'll definitely see one over the coming 6 months or so in the United States. Looking ahead, it will be a very busy week. It will be a holiday shortened week in the United States, the world's biggest market. You've got the Washington's birthday holiday on Monday, or President's Day. It goes by those 2 titles. Beyond that, we will get the minutes from the most recent Federal Reserve meeting, so that will be interesting. And we'll get the December PCE inflation report, personal consumption expenditures. That is out on Friday, so we'll get it in the early hours of Saturday morning. It'll cover December, so it's a little bit dated. I think that's because of the government shutdown. We're still getting drip-fed some of these releases. But PCE inflation is the Federal Reserve's preferred inflation measure. So this will still get a bit of attention, and we'll be watching that closely after that softer CPI report last week. Inflation will also be in the spotlight in the UK, in Canada and Japan. We'll be getting fresh inflation figures out of all of those regions. And the other notable economic highlight for me will be global flash PMIs. Now, these are out on Friday. And they will cover February, so very up to the minute. They'll give us a very useful pulse check about how the global economy is sitting. Now, a month ago, in January, they all looked pretty good. They were all comfortably in expansionary territory, all above 50, some by quite a margin. So we'll be looking for an update on that front. I think you get the Aussie one first at 11 a.m. on Friday, our time. Japan follows after lunch at 1:30, and then over Friday night and into the early hours of Saturday morning, you get the releases from the UK, Europe, and the US. So as always, I will take a look at those on Saturday and put pen to paper and record some thoughts and make the job easy for you guys. All you'll need to do is read my report or listen to this corresponding podcast episode in a week's time. Here in New Zealand, it will be a really busy week too. We have got quite a lot going on. So we'll do this in chronological order. We will get the first housing market report of 2026. I think this is out on Monday morning, 9 a.m. It'll come from the Real Estate Institute, and this will cover the month of January. Now, the housing market finished last year in pretty sluggish fashion. We haven't seen a whole lot of movement. Sales volumes have been okay. They slipped into the end of the year as is normal, but they've been okay in the months before that, but still not a lot of movement on the pricing front. So still looking for that summer rise, still looking for that reaction to some of the lower mortgage rates and a stronger economic backdrop, better job security and so forth. So we'll take a look on Monday and see whether we see any evidence of any improvement across the housing market through this early part of the new year. The dairy sector, that will be in focus too. Early on Wednesday morning, we will get the latest GDT auction results, the dairy trade index, and headline prices have been very strong lately. The GDT index rose 6.7% a fortnight ago. That was its third rise in a row, and it was actually the biggest gain in almost 5 years. So prices are up about 15%. This year, they're back at October levels, and we've gone a long way to making up for that very weak second 6 months of 2025. Now, many of you will remember that Fonterra cut its milk price forecast twice, late last year, once in November, then again in December. So the midpoint of its forecast range is sitting at $9, but I think we're all now sitting here thinking, well, it's definitely going to be higher than that, maybe $9.50, maybe knocking on the door of $10. So we'll all be watching that dairy auction early on Wednesday morning. Later that day, we will get the key event of the local calendar. It will be the official cash rate decision and monetary policy statement from the Reserve Bank of New Zealand. Now, these are due at 2 o'clock on Wednesday, and they will be followed by a press conference at 3 o'clock. So just a bit of a recap. After cutting the OCR 9 times from a 15-year high of 5.5% in 2024, they're at 2.25% today. Now, the Reserve Bank is firmly on hold and they will not be changing interest rates this week. However, after a string of more positive economic indicators and a hotter than expected inflation report, the narrative amongst markets, amongst economists, has very quickly turned to when will the first rate hike be? And the last forecast set from the Reserve Bank, which came out in November, so it's a long time ago now, it's almost 3 months ago, it suggested that the first hike would come in early 2027, so first quarter of 2027. However, markets think it will come sooner than that. They are now picking the latter months of 2026, and a couple of economists have moved to suggest that too, and that's understandable because the recovery has been picking up speed and inflation has been running a little hotter than expected. So I think we'll all be watching for confirmation of whether the Reserve Bank agrees with that or doesn't. So the first place we'll all go is to the forecast set. We'll look for that OCR track and we'll want to see if it has changed from what it was in November. In November, first hike in early 2027, has the Reserve Bank brought it forward and does it agree with markets? Or does it not? Then obviously we'll get that press conference. So Wednesday afternoon will be very, very interesting on the local front. Last but not least, the reporting season. Plenty going on when it comes to corporate earnings. Internationally, we are starting to move into wind down mode. We've seen about 3/4 of US companies report results, but there's still a few to go. I think 60 odd S&P 500 companies set to report this week, and plenty from across the rest of the world too. So global companies I'll be watching: Palo Alto Networks, Republic Services, Nestle, Walmart, plenty of others too. It's been very good so far. The S&P 500 overall has reported earnings growth of 13% year on year, which is quite a bit above what people were expecting before anyone started reporting. I think the market was at about 8, maybe 9%, so 13 is pretty good, and that would be the 5th consecutive quarter of double-digit earnings growth. So even though you're seeing lots of volatility across markets, people rotating out of some sectors and into others, and lots of scary headlines, corporate earnings is still delivering, which is really important. Things will pick up in this part of the world too. I know we had a lot of results last week, particularly across the Tasman with a couple of those healthcare heavyweights, with 3 of the 4 big banks, but there will be more to come. This week you got Stockland, you got BHP Group, you got Rio, so resources will really be in focus. Brambles, Goodman Group, Transurban, Wesfarmers, QBE Insurance. So the whole week is busy across the Tasman, and things will heat up here in NZ too. We had Skellerup on Thursday, great result from Skellerup. That company's done very well in recent years. This week, A2 Milk, Contact and Freightways, they'll kick things off on Monday. Wednesday, you got Fletcher Building and Spark. Thursday, you got Auckland Airport and Sky City. Friday, you got Vector, and there's plenty of other companies in and around those. Then next week, rinse and repeat. There's a whole lot more NZX companies reporting. If you're interested to know what I'm looking for through the reporting season, I did record an episode about specifically that, so go back through the archives and track that one down, give it a listen. But otherwise, it will be a big one. Shorter week in the United States, Monday is a holiday, but plenty going on here in New Zealand with dairy prices, the housing market, the RBNZ. That will be the big one on Wednesday afternoon, and lots of results too. So thanks for listening, team. Take it easy, enjoy your week, and we will talk again soon.
For more insights, visit craigsip.com.